Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell. I'm your host Nickey Mirchandani. Well, markets are likely to start on a weak note today on the last trading session of the week. Thank God it's Friday, quite literally. SGX Nifty indicates a negative opening coming in for the broader index in India, and US markets have closed lower after Friday's job report spurred in fears of more aggressive interest rate hike coming in. US weekly jobless claim post the largest increase in 5 months. So clearly, some amount of negative cues out there when it comes to the macroeconomic data. Asia Pacific shares, they too have they've fallen early in trade today as markets have digested more signals on US monetary policy. Investors await February farm payrolls data. That's the report coming in for US. And if you talk about the FIIs and the DIIs trend, they haven't been quite encouraging. Foreign institutional investors have sold in shares worth around 560 odd crore, and DIIs too have been the sellers to an extent of around 42 crore on March 9. But with this, let us get going and discuss some stocks and strategies today with the guest that we have from Nirmal Nirav Chheda. Nirav, good morning. I'm going to start off by asking you about the Nifty levels right now. We saw some amount of losses coming in on Nifty. Do you think Nifty would be able to defend that 17,500 mark in today's session?
Yeah, good morning, Nickey, and thanks for having me. Looking at the Nifty, it's in a slow downtrend. Very rarely we see, such a slow downtrend happening, and this is because of the VIX. Where the VIX is below the 15 levels, and I don't think, with this VIX, you'll see a big cut in the Nifty. Having said that, we are opening down, and as you said, 17,500 might not be held, but I don't see a very deep cut. Probably, 17,300, 350. That is where Nifty should end up, in a couple of days, which is the lower band of this downward channel formation that Nifty is making. From there, again, you can expect a bounce. So what is really happening is there are lower highs and lower lows taking place in Nifty. Right now, the previous high of 18,100, that wasn't taken out. We saw Nifty making, a high around the 17,900, 950 levels, and from there coming down. So probably, the lower low now at 17,350, we might break that. We can come down towards the 17,300 to 80 odd levels and again witness a bounce back. Until the VIX is down below the 15 levels, nothing to worry. Again, look for buying opportunities. You will keep getting them, in some time. This once this channel formation is broken out above, only then, you'll see Nifty again moving up towards that 18,500, 19,000 levels. Until then, continue to trade with this strategy of buying lower and, selling higher.
Sure. And also a word coming in on Bank Nifty index. Do you think today could be the day where we see more amount of support coming in from Bank Nifty overall? What do you make out of it? And also the immediate, RSI levels.
Yeah. So, see, Bank Nifty, when you see, it has been the stronger of the two indices, there's no doubt about it. But the open interest is very high in Bank Nifty, and especially, if you see a little backdated data for the last week, you've seen a lot of open interest built up in the second and the third month's futures. And that doesn't really happen every time. So I definitely believe, there is going to be a larger cut in Bank Nifty coming in now, vis-a-vis the Nifty. But if you're holding long positions in Bank Nifty, I think one should be exiting this long positions. There are a lot of stocks which are ready to fall, especially in the PSU space. So the likes of SBI, BOB, CanBank, all of these are, likely contenders for a deeper cut. So book profits. Also, one more thing I'd like to add, there's a lower trend line, a downward sloping trend line resistance around that 41,500 odd levels. It has hit that and it has now come down, which is not a very good sign. I believe now the lower band, which is below the 40,000 levels, it's around the 39,500 levels. That can be probably hit again. And it's about 2,000 points from current levels. So, not looking good for the Bank Nifty at this point of time.
Clearly, the word coming in on the PSUs out there. So far, they've been holding up. Some amount of interest has been witnessed thus far. But Nirav, I'm also going to chat about what do you think could be the three profitable strategies or stocks that viewers can now look at, which probably are near their breakout levels and can be a decent bet in falling markets like this.
Ah, it's a difficult question, but yeah, I'll try to take it down. So Nicky, apart from the PSU banking stocks, I really like the index. What has happened is in this rollover, a lot of shorts have been covered in the PSU pack as a whole across sectors, except for banking. I'd like to pick all three as PSUs only. The first one is GAIL. I believe this stock is headed higher. It's making a tremendous pattern. It did go up towards that 113, 14 odd levels, but definitely it has come down. I believe 105 is a good support area. So, if it opens down, definitely look to add this stock. You can probably witness good buying going forward, and it can come up towards that 117, 120 odd level, which can be, a good level to book at. You can keep a stop loss of around 100 for this one. The second stock is GSPL. Again, very good pattern, a flag kind of a formation breakout. Even in this market, you're seeing a good breakout in this stock. Volumes have been terrific. I believe this stock can actually move up towards its previous highs, which was around that 350, 360 odd levels. So look to buy the stock at current levels. Even on dips, you can keep a stop loss of 275 for your longs. This stock can come up towards that 310, 315 levels in no time. So that should be your first target. The third one, again, it's a similar space, but I really like this stock. It's ONGC. When the crude went up, this stock was expected to move up a lot, but this did not. In fact, it started coming down. Most importantly, there was a phase where a lot of buying happened in between 120, 130 odd levels, lot of delivery-based buying, good volumes happening, but there were shorts in the system. And in the last 2 months, you are seeing the shorts being covered, and which is very, very good sign for this particular stock. I believe this stock can actually do very well. It can move up very aggressively towards that 170, 175 odd levels. So look to buy it here. 150 should be a stop loss on a closing basis. All these three stocks from the PSU space, I believe in the next couple of days or so, these can give you good returns.
Sure, Nirav, just stay on the sidelines while we just quickly address the top movers of the day. Of course, you can pick and choose the stocks that you feel have a good, attractive scenario, at least on the charts per se. And a bunch of stocks that we'll be addressing this morning include the like of Tata Motors, Max Healthcare, Bharti Airtel, MGL, Gokuldas Exports, amongst others. Of course, the first one that we're going to be talking about is, no price for guessing, Tata Motors out there. The unit, Tata Technology, has filed already a DRHP with SEBI to raise funds via an IPO. Now, this is clearly an interesting development which is coming through. And the unit, actually, the company plans to sell on around 9.5 crore shares, which represent a total paid up capital to an extent of around 23.6 crore. The parent company, that is the Tata Motors, which holds around 74.69% stake overall in the firm, it's planning to raise, will be selling in around 8.1 crore shares, which represents around 20% stake overall through the OFS. And of course, we also have in other shareholders in the IPO, such as Alpha TS, which is TC, which is also going to be selling in. Tata Capital Growth Fund 2 would be selling in some amount of stake in the company for that matter. So clearly do keep an eye out on Tata Motors. Overall, the auto space has been quite active in the recent 10-15 days, and we've seen significant amount of traction building in on that one too. So clearly, that is going to be one of the stock which we're going to be keeping a close eye out on. Of course, second one, we're going to be talking about Max Healthcare Institute. Now, this one is an ET report. The company, along with the KKR, have initiated a separate discussion with TPG to buy Care Hospital. Now, TPG has stepped in after the earlier front runner, which is Blackstone, pulled out due to a valuation mismatch. Now, the preliminary discussions have begun afresh after the valuations have fallen to around 5,800 to 6,000 odd crore. Now, do remember the fact that KKR was the original backer of Abe SOI, which led the Radiant that acquired Max Healthcare. So clearly eyes on that one. Bharti Airtel, that was the one Jefferies has upgraded to buy. We've seen significant traction building in. Yesterday we saw sharp uptick out there for Bharti Airtel. So some upgrade coming in today for Bharti Airtel on Jefferies. But we are going to be on the sidelines to quickly address the markets. And meanwhile, we'll also talk about Bharti Airtel, where, we're seeing a 30%. Jefferies at least says that they see a 13% growth in its mobile ARPUs over FY23 to 25. They say the market share gains are also likely to accelerate amidst the 5G rollouts. So let's see, how does the market open right now? Are we looking at a negative start coming in for the markets per se? Clearly, let's look at the charts right now. We are looking at a negative start coming in for the market, just as we anticipated. The cuts are getting sharper, I must say. The bears are clearly gripping. They're controlling the markets at this point of time. They're further tightening their grip on the markets, if I may so say. Bank Nifty out there needs to be seen if the support is coming in from that one, or we're seeing some amount of cuts coming in on Bank Nifty index too. More than 1% out. So clearly, it's clearly started with a major amount of losses to an extent of around 1% at least. An early trade remains to be seen. If losses accelerate through the course of the day, mid-cap index, well, broader index have been holding up, but today mid-cap index too has given up gains. Down and out with losses of more than 0.75% on mid-cap index. And if you talk about the small-cap index too, 0.4% gone on that one. Beg your pardon, this is for Nifty Auto Index, which thus far has been, holding up. Small-cap index, we've seen 0.5% gone out even on that one. And if you talk about the sectoral gainers and the sectoral losers out there, just to understand the taste of the market, we've already seen cuts coming in on the Nifty Auto Index. Remains to be seen if something like a Nifty IT, Nifty, Realty, these index, how are they stacking up overall in trade today? Nifty IT, we're seeing 1.3% down and out on that one. So clearly some amount of losses are just no support coming in from the Nifty sectoral index per se. Bank Nifty also wasn't doing too well in trade today. If you talk about the top gainers and the top losers per se, just on the Nifty 50 list, just to see how the trade has been stacking up thus far. Britannia, Tata Motors, Bajaj Auto, like we just pointed out, we spoke about Tata Motors right at the start of the trade, right? Okay, now that's pretty much a flattish move after seeing the top gainers out there. Britannia and Bajaj Auto, they are holding up in green for you right now. Britannia is up with gains of around 0.5%. Bajaj Auto, we're seeing same gains. Well, overall market breadth doesn't look quite positive at this point of time, clearly. In terms of top losers, Adani Enterprises there, all right, and Hindalco, Bajaj Finserv too is among the top losers out there. JSW Steel, HGFC too have been topping the list. So clearly, metals seem to be, to be on the losing side of the game, and Polo Hospital, ICICI Bank, HDFC Bank. So financials along with metals have kick-started the day rather in red today, if I may so call it. But Nirav, I'm just going to quickly toss it back to you and ask you about Tata Motors. The subsidiary now plans to come up with an IPO out there. What do you make out of it? Do the charts look attractive? We've seen significant trend building up for companies, for auto sector per se. What do you make out of Tata Motors, at least on the charts?
Yep. So it's absolutely flat actually for this stock. The stock's not moving anywhere. You're seeing some deep resistance coming in around that 450 levels and good demand coming in from that 390, 400 odd level. So it's near the upper band. There is likely to be some resistance coming in, some selling coming in. It can probably come down towards that 410 odd level. So, I wouldn't be buying at this point of time. Probably once it gets this breakout of 450, that is when I'd be interested in buying the stock, but not at current levels. So it's just a wait and watch game for me right now. If it comes down, I'll be buying around that 410 levels.
All right. Also, let's talk about the market breadth right now. There are 47 declines as compared to the 3 advances. So clearly some amount of negative momentum building out there. If you talk about the sectoral index, all of them, almost there is no place to hide out there. All of them are trading in red right now. You talk about the Nifty Bank Index down and out by 1.5%, Auto Index to 0.5% there, Nifty IT 1.1% loss there. And the losses have been major for Metal Index right now. Now, do remember there have been a couple of bullish reports per se which have come in on the metal sector, but a few bullish calls coming in on that one. But today the index is down and out with loss of more than 2%. Also talk about the PSU bank, like Nirav was pointing out right at the early of the trade, right? 1.7% lost on that one. And if you talk about the realty index too, more than 1% gone out there. So clearly no place to hide when it comes to the sectoral index. But Nirav, what do you make out overall of these metal counters right now? Something like in Hindalco, something like a Tata Steel. Do you think there is some amount of upside still left? This plain volatility playing out on these one, at least when it comes to the chart and the stock prices.
Yeah, so what is really happening in this metals pack is a lot of stocks actually did not fall in that phase where most of the metals are falling. So those are the stocks which are weak at this point of time. So a Hindalco or a Jindal Steel or a Vedanta, they are weak at this point of time, and they are likely to fall further. But a Tata Steel, a SAIL, a National Aluminium, which had fallen a lot. They are showing good signs of recovery at this point of time, and I believe open interest is low in these stocks as well. So there's a likelihood where good buying will emerge in these pockets. But as a whole, metals will be mixed. So pick and choose what you want to buy. I'd be a buyer in Tata Steel and SAIL. I'd like to buy Tata Steel at current levels with 101 as stop loss, and it can go up towards 115, 120 odd levels, which would be my target. Similarly for SAIL, I believe 95 to 100 is coming. 80 should be the stop loss. So similar story here. I'd be a buyer here. Also, I'd want to tell you about selling a couple of sectors if you allow me to.
Sure, please go ahead. All right, Nirav, you can go ahead. Please go ahead.
Yeah. So, see, as I said, banking, PSU banks, I've been bearish, and I really believe, this is one pocket where a lot of selling can come in. So, I'd be going short in Canara Bank and BOB. I believe these stocks will witness some tremendous amount of selling because there has been a huge upside for these stocks in the past 3 months. And I think a lot of volumes have happened at the upper levels. That means distribution is taking place, and open interest is very high, which is not a very good sign. So all in all, I believe these two stocks should at least fall at least about 10 to 15% from current levels. So look to short these stocks at current levels, keeping a 2.5% stop loss on the upside on a closing basis, and you will see a good cut here. I believe Bank can come towards that 280 to 85 odd level. So short at current levels, even if it's opened down. Second pocket that I really want to talk about is the IT pocket, where large cap stocks like Infosys and TCS, these have been underperforming, and I believe Infosys and TCS both can be shorted. Why? Because they've made negative patterns. I believe Infosys can come down towards that 1400, 1350 odd levels. It's a negative chart. It's hit the resistance at the 1600 levels. It's the third time it has taken resistance there, and it has come down. Overall, longer term charts have become negative as well. So it's not a very good sign, at least for the next couple of months. Even TCS, a very important resistance has been taken for this stock around that 3550, 3600 levels, which is where a breakdown had come in this particular stock. It tried to break out, but it couldn't, and post that a lot of selling has come in. I believe even at this levels, it can be shorted. It can come down towards that 3300, 3200 to 3150 odd level. So the two large caps in the IT space are negative, and as a whole doesn't look good for this whole sector, at least in the large cap space. So yeah, most likely these stocks will come down. So if you're looking for shorting opportunities, these are the opportunities where you can make some money.
All right, Nirav, thank you so much for taking out time and speaking to us early in the morning. Well, Bank of Baroda, not a negative, I mean, clearly some amount of negative momentum building upon that one. In terms of the news perspective, the bank is going to be selling up 49% stake in BOB Financial. So do keep an eye out on that one. But it's that, at that time of the show where we bring in the fundamental guest to address the fundamental story playing out thus far for the markets, which so far have been playing out to the global cues. Let's bring in our guest, Anil, Rego, founder and fund manager at Right Horizons PMS. Good morning, Anil.
Good morning.
All right, I'm going to start off by asking you overall your view on the financials as well as the IT space. Financials thus far have been an interesting story overall for the last year, but this time around, at the start of the year, the initial euphoria seems to be, probably fizzling away. What do you make out of it? Do you think the fundamentals still remain healthy?
Yeah, I definitely think so. So, the sector has seen some bit of interest rate movements, and that has been really a large swing that we have seen in this year. What I would expect is that as we go forward, maybe, interest rates sort of inflation also started cooling down, and hopefully things will get back to normal. We must keep in mind that, compared to, let's say, other global economies, right? So if you look at the US and the UK, etc., for them, interest rates were something like and inflation was at, 3-year decades highs, right? So, whereas for us, we have not seen it as high as that in respect to what we have seen in the recent past as well. And recent past, I'm saying, say, 3-5 years and stuff. Right. So from that standpoint, yes, we may be actually better off, in terms of financials. I believe that we will also start seeing, a little bit of a grounds up. India as an economy, as government spending comes in, we are also coming back to an election year. Okay, I think agri hopefully should do better to this year as well. Okay, so I think there are enough factors where grounds up, I think we should do well. Some of the issues that were part of, banks and financial institutions are, I think, a little behind us. We already saw that, some bit of a deleveraging cycle, in the last decade for us, which others I expect to see, other economies I expect to see in this decade. So relatively, I think, we are at a better place than what we were. And I think financials should sort of do better. In terms of, IT and technology, the other sort of big sector, yes, we have global headwinds. We also have, the US, I think will do a little worse. So I'm not as bullish about it. I would rather focus on, say, inward focused sectors, which are more domestic, manufacturing, etc., where there are, tailwinds, to take us forward.
Sure. At this point of time, do you think that the consensus is kind of underestimating the growth and the margin risk profile coming in FY24 overall for the IT counters? Because in the pandemic, we've seen huge amount of outperformance coming in from the IT index, right? How do you expect, I mean, sure, you've said that you're not quite bullish about the IT sector overall, but if I was supposed to further divide the space between the large cap and the mid cap, do you see some amount of value growth still coming in from the mid cap basket in terms of the valuations?
Yeah, I think the mid cap basket may be a little more healthy in terms of valuations. My issue is coming back from maybe where, let's say, the customers of even these large companies are, and also some of the smaller companies, right? So if we think that, a company where the US and companies in the US are, their largest customers, then I believe then we have an issue, because I think that is going to be a much longer cycle there, because they have not yet, started their deleveraging cycle that I expect to happen. So I'm saying fundamentally, if they are focused globally, and especially, I think, oriented towards the US, because the US saw a great run in the last decade, okay, and sometimes that catches up on you. As history has shown, global economies, whoever the leader of a decade, right, you almost underperform for maybe up to or at least 2 decades, right? So I'm just saying that, so consumer, from their customer side, I think they'll face pressure. And as their customers face pressure, I don't think that they will be kind on margins, on billing rates, etc. So I think that it makes sense just to be a little cautious out there. Wait it out and possibly focus on domestic sectors. But yes, the issue with mid-cap IT companies is that they may not have the wherewithal that the larger companies have. So if they find a slightly more difficult environment, right, so they also will get impacted. But relatively, I think if the real negative situation doesn't play out, okay, then I think mid caps is something that you can pick and choose, and also be a little cautious about how you go about it, and choose your stocks in the sector.
That's clearly quite an interesting observation coming in from you. A leader of decade can underperform for the next 2 decades. So clearly keep an eye out, at least when it comes to the large cap IT basket. Might just find some value in the mid cap space overall. But if you talk about, let's also talk about the building material space, the cement space. There is significant. I have been chatting with a number of guests out there, the fundamental. Some of them say that, cement probably could be the outperformer because it's a pre-election year. There's a lot of thrust coming in on the infra. We're looking at the price hikes probably coming through. Adani's might just go down, slow a little bit on the expansions. How are you looking at overall the valuation picture of these players? Do you think they're still reasonably priced? There is an attractive risk-reward ratio. What do you make out of this space?
Yeah, so I'm much more comfortable, like I said, of internal focus and building materials and cement, etc. Come within those spaces, and that is something which I believe. So yes, I think the big focus of the government has been, how do I increase spending? How do I focus on spending on infrastructure? And I think that's a very, very good thing to do. If you want to, actually kickstart the economy, if you want to look at a longer term, that's a better way to go about it, and that's what I like. So even in an election year, they didn't come and give freebies, etc., and said, okay, let me go back and work on places where we have long-term growth for the economy. So I think all of those will play out. Yes, there are other factors of supply where Adani had unlimited pool of capital earlier. They are going to be a little more tight, and market is watching for deleveraging. So yes, there will be some bit of impact out there, but I still think broader from the demand side, that's the bigger one, and I think that will really come back. Housing also has not done really great over the last number of years. I think hopefully one is just waiting and watching on inflation and interest rates. If it stabilizes maybe a little lower than where we are, then I think stability will come back there as well. But definitely there is the infra and the government spending, which is anyway there. And I think the growth in the economy, which will also trigger capital expenditures, and companies get into an expansion mode. I think that will also be one of the factors there. And if the rest of the economy does well, then obviously you'll find people are buying houses and able to go back and start investing in them. And I think it's much more reasonable if I see prices have not really gone up, possibly been very muted in the real estate side. Along with that, interest rates are much lower than what it was, say, 3-4 years back. Because I think it's a good place for consumption to come in, and I believe that those sectors will do well.
Sure. Speaking about consumption story, there have been a couple of reports suggesting that probability of El Nino probably hitting in 2023 is rather high, but there isn't really quite a significant strong correlation per se with the FMCG volumes, with HUL being the close proxy. But what do you make out of this space, and are you bullish on that space overall when it comes to the FMCG basket?
See, I see things relative to the past, right? So in the past, there has been a lot of volatility. You had COVID, you had various other factors. You had a global market fall. So some of the defensive sectors, did well. So I'm just saying from a correlating, looking at cycles of sectors with respect to, how investors look at it. See, one is in terms of fundamentals, one is in terms of the investment flows as well. So I think that possibly we may have a little bit more risk on. So I would believe some of them have really done well. We may find the baton, getting handed over to somebody, some other sectors. But at the same time, I'm not expecting them to do badly. It's just that, other things may just find more momentum and grow faster. Consumption may continue to be steady, and from a share price of these companies, they've also gone up and done relatively well. Okay, so that is something, sort of to keep in mind, relative valuations, etc. So I would think, yes, in summary, consumption will continue to be steady and do well. However, it really may not mean really great returns for investors in the sector, because I think the others which are have a pent up demand will start coming and doing better.
All right, Anil, also a final word coming in overall on the auto space, and of course a sector that you think could do well in markets like this, as tepid as this one. Auto stocks, we've seen some significant amount of traction coming in. There is this whole thrust around the electric vehicle segment. Demand seems to be picking up. What do you make out of this? And, do you like auto space? Do you have a positive stance coming in on auto space? How are the valuations importantly stacking up as compared to their long-term averages?
Yeah, so I think the fundamental thing on auto, I think, is, the cycle is coming back, right? So, and we've seen in the past when the auto cycle can really play out and it can, deliver well for an extended period of time, right? And we've come back to a situation where suddenly you find on the ground, if you want to buy a car, you have a long waiting period and it's sort of widespread, right? So apart from that, you have this whole, EV vehicle and the transition towards it, pollution levels, etc. So you will find, I think there are enough of triggers for auto to continue to do well. Okay, and I think that will be, it's a real fundamental one where I believe as we go forward, because of the way production goes up, thanks to demand, etc., you may still find valuations on a forward-looking basis will continue to be attractive, and companies will also start expanding, and you'll probably see some bit of more impetus coming out there. So I'm reasonably bullish on the auto side. The only point that I would like to make out here is it's also a sector with changing dynamics, right? So for example, I'd be very interested to see how, for example, the two-wheeler plays out, right? Because if you go back and see, there's so many unknown names who are coming in on electric two-wheelers, and we don't know how far that disruption will sort of happen. So I think that we need to be watchful of how the electric vehicle, how their companies are placed in that space and their ability to withstand competition. Okay, and because it is the entry barriers, I think, on say at least the two-wheeler side is far lower, right? So that is something that I want to be a little wary of, and look for a place which may be likely to also be able to manage the EV space. I think that's also from a slightly longer term basis that will also come back on the cars, etc. But I think the price points are still very different, which is why you may still find that there may be a little bit more headroom, a little bit more time that four-wheelers may take, and the entry barriers also there are a lot more higher than say what it is for the two-wheeler space. So I think I would rather focus a little bit more on the four-wheelers. There is demand in, and I think companies are likely to do very well, and that will, I think, drive performance of these companies over the next couple of years.
All right, Anil, we get your point completely. Well, we get a positive stance coming in on the auto space, but overall changing dynamics. And two-wheeler is the segment where we clearly need to keep an eye out on this one. But Anil, thank you so much for taking out the time and speaking to us this morning.
Welcome. Thank you.
All right, with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching, and please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen for the rest of the updates. Stay tuned into moneycontrol.com and Moneycontrol app.